This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, it is the Tuesday edition, or the pre-Fed decision, I should say, of Bloomberg Businessweek Daily.
Yeah, I'm looking forward to that meeting tomorrow. I'm looking forward to hearing from Jay Powell. Well, they're meeting right now.
That's right, it began.
They're meeting right now.
It's underway.
The press conference tomorrow.
Yeah.
As we speak.
24 hours from now, we'll know. Right?
First question.
Jay, how you doing?
I don't know.
Or not.
I think he'll be very prepared to answer all questions, and he'll have pages in the binder marked. Mike McKee, I think, is on his way to Washington, D.C. already.
I bet he is. It does feel like everything, everywhere, all at once. Our producer, Sarah Livesey, kind of making some comments in the newsroom about that. It does feel, we've got the dollar at its weakest in nearly 4 years. The S&P hitting an all-time high intraday. We'll see how we close up. We had U.S. consumer confidence declining in January to the lowest level in more than a decade, on more pessimistic views of the economy and labor market just one day before the Fed decision. We'll see what the U.S. Central Bank has to say tomorrow when it comes to how consumers are doing.
Okay, so ahead this hour, how all this is playing out in terms of the U.S. dollar. We're going to have much more on the debasement trade. Also, American and JetBlue earnings, Boeing as well. Sheila Kahyaoglu of Jefferies is going to be joining us. And Silicon Valley speaks out against ICE in Minneapolis. This as Texas Governor Greg Abbott calls for a freeze on new H-1B visa petitions.
It's kind of interesting, right? We are seeing more and more CEOs speak out. All right, a lot to come in the next hour here on Bloomberg Businessweek Daily. Let's get you going, though, with a check on the trade. Here is Charlie Pellet.
All right, thank you very much indeed. We got the Dow lower, the S&P, NASDAQ. They are both higher. Do want to begin with the developing story headline right now from the Bloomberg Professional Service. Anthropic set to raise about $20 billion from venture capitalists and other investors. That is double the amount initially targeted. This, according to the FT, citing people familiar with the matter. Fundraising would value the company at $350 billion. Also, another developing story, President Trump said ready to back reconstruction in Syria. Traders sending stocks toward records. S&P right now at 69.82, the old high, 69.77. Keep it locked into Bloomberg Television and Radio to see how things shake out right at the closing bell. The S&P up 32 right now, up by about 0.5%. Interesting divergence with the Dow dropping 448 points, down 0.9%. Health insurers sending the Dow lower. United Health down now by 19.6%. Humana down 19.1%. Again, NASDAQ pushing higher, up 1%. The Russell 2000 index diverging from the S&P. That index lower now by about 0.1%. Ahead of 4 out of the 7 Mag 7 earnings reports this week. Our Mag 7 index up 1%. 10-year 4.22%, but the 2-year 3.57%. Gold up 1.5%. 5,086 the ounce. West Texas Intermediate crude up 2.3%. WTI 62.02 a barrel, and Bitcoin right now 88,083, up by 0.1%. Amazon shuttering its Amazon branded grocery stores and automated grab-and-go markets, closing down 2 centerpieces of its push into physical retail. Amazon shares, they're up by 2.2%. Again, recapping, stocks trading mix, the Dow lower by 0.9%, S&P up 0.5. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yeah, I think I tried one of those Amazon stores maybe once just to try it out.
The Amazon Go store?
Yeah.
I'd never been to one, but we'll talk about this a little later. The grocery, we get all our groceries from Whole Foods delivery.
Yeah. Oh, you do?
Just because it's the most convenient thing. You can order the 365 brand. But if you go to the Amazon app and say you want to order groceries, there's like 6 different options there. It's not easy to navigate.
It isn't.
Yeah, I've talked about this with Romaine before.
It's a little tricky.
Yeah.
All right, so we are going to talk about it a little bit later on. Hey, right now we want to talk about what's going on in the currency markets. There was a headline that just crossed the British pound climbing to its highest level versus the U.S. dollar since October of 2021. The greenback overall languishing when you look at the G10 currency pile this year. It's at the bottom, pointing to a shift in the way investors are viewing the traditional safe haven asset. And that's interesting. We have been talking about this, I feel like, over the last year or so. It's facing pressure from concern about rising U.S. deficits, trade frictions, investor caution amid unpredictable Washington policymaking, including what we saw big time last week, President Trump's threats to take over Greenland, and risks about Fed independence. And on global issues, Tim, I feel like we have seen some really prominent names talking about.
Yeah, JP Morgan Chase CEO Jamie Dimon just earlier this month, he talked that there are chances we'll have a problem somewhere somehow, and the biggest unknown is geopolitics. That was also addressed by Goldman Sachs CEO David Solomon, who spoke earlier today with Bloomberg's Stephen Engel at the 17th annual Goldman Sachs Global Macro Conference Asia Pacific in Hong Kong.
There's a lot going on geopolitically. There's a lot going on in the world. And as that stuff plays out, it can lead to speed bumps or, distraction. People move forward when they're confident. The noise sometimes can sap confidence. Yeah. I think at the moment, generally things look relatively green, but that doesn't mean there aren't issues that could pop up.
Yeah, certainly. We've already seen some things pop up here in 2026. Goldman Sachs CEO David Solomon, of course, earlier with Bloomberg Stephen Engel at the 17th annual Goldman Sachs Global Macro Conference, Asia Pacific in Hong Kong. So as we mentioned earlier, geopolitics, one of the pressures on the U.S. currencies, and as we see investors move out of the U.S. dollar, we see an accelerating diversification into gold and other reserve assets. And what's interesting is this isn't a tepid trade. There are heavy flows behind the move. Tim, it's not just sentiment.
With more on the currency trade and declines in the U.S. dollar, Bloomberg News FX and rates reporter Carter Johnson is here in the Bloomberg Businessweek studio. The declines that we continue to see in the U.S. dollars, the flows behind it, what's the story that's telling you?
Sure, absolutely. Thanks, Tim. Thanks, Carol. And I think what's really interesting is we can look at this on a pretty long timeline. So I'm starting to hear comparisons late last week, today, yesterday, to this feels like early 2025 and Liberation Day all over again. And that's just because, yes, we're seeing some action in stocks in treasuries, but really this is a real sort of dollar-focused impulse to sell. And of course, on a shorter timeline as well, we can think about that in the context of what we saw last week, which was some pretty concerted movement in dollar yen specifically. And that was, as we reported, likely because some folks here in the U.S., the New York Fed acting at the behest of the Treasury, were reported to us to be checking rates and sort of calling into some banks and seeing where exchange rates were trading. So on a couple different levels, sort of in the near term and in the big picture, as you mentioned, Carol, questions about the U.S. fiscal position, policy uncertainty, those are all combining right now.
Carter, reading in this morning, Bloomberg reporting out the positioning is heavily one-sided. They said since Thursday, roughly 2/3 of options trades in the euro and the Australian dollar have been bets on further greenback weakness. So is this largely about dollar decline and not about bets on other currency strength backed by fundamentals?
It's a great question. I think the answer, honestly, is both. And a lot of that impulse, as we just talked about, is because of a declining dollar and questions about U.S. policy. But we are seeing relatively solid growth expectations in the rest of the world, whether that's Europe, maybe that's in Asia. And that really underpins the impulse to sell dollars as well. If growth in the rest of the world was cratering at the moment, we wouldn't be seeing this sort of action we're seeing in terms of dollar sales. So it's absolutely the other side of the coin as well.
We've got stock investors watching and listening to this program. What is the relationship between weakness in the dollar and what happens in the equity market? I mean, you made the comparison minutes ago to kind of feels like April 2025, and we all remember what happened to the equity markets during that time.
Absolutely. And I think that's the big question is, will we see that again, where typically you'd expect to see the dollar weaker as stocks strengthen. They have a negative correlation, particularly the dollar as a traditionally haven asset. We didn't see that late last year. The stocks, the dollar, treasuries, they were all falling together. So I think that's the big question right now is, will we see that again? I don't think we are yet. But in sort of a different picture as well, a weaker dollar should theoretically support domestic manufacturers. It should support exporters here in the U.S. That's typically what we'd see on a lag. But we also know that that's something the Trump administration has been vocal about as well. A weaker dollar theoretically, again, doesn't work instantaneously, but theoretically supports domestic manufacturing and exporters who are looking to sell to the rest of the world.
Hey, one other thing I want to ask you, though, but is it about global investors, and we've talked about flows into European equities. Is it another sign, perhaps, that global investors are less interested in dollar-denominated investments?
It is possible, although I think it's too early for us to say at this point, as we knew last year. We don't have that data yet necessarily. And again, if we look at just the relative performance of U.S. stocks, they're doing all right. They're certainly holding up. I think what it could definitely be indicative of, and this is something we've covered a bit here at Bloomberg in the past, is hedging behavior. And what that means is you're a global investor invested here in the U.S. You might still want your exposure to U.S. stocks and U.S. tech, but you're going to hedge that dollar component of that much more than maybe you used to.
Mentioned Jay Powell tomorrow, the press conference. What are you watching for from your perch as somebody who watches FX?
Absolutely. I think just as we are in the rates and the treasuries world as well, any sort of forward guidance that we can get from Chair Powell, that'll be a tall order given the spotlight he's under at the moment, but any sort of future guidance about the outlook for rates this year, that'll be particularly impactful for the dollar as well as rates.
Right. If for any indications that there's higher rates coming, we're talking about that could put a floor under the dollar, correct?
That could definitely help. Yeah. And, it's
Maybe.
funny. Yeah, no, for sure. JP Morgan, when they came out with their big currency forecast late last year, they're bearish on the dollar, but the big risk to their bearish dollar view is the Fed has to turn around and hike. Again, we might not see that, but that's the risk.
Although there is, it feels like a growing conversation about inflationary concerns, which would certainly lead the Fed certainly to keep rates as is or possibly hike them. We'll have to see. Carter, thank you so much laying out the currency trade for us as we continue to watch the U.S. dollar. He's Bloomberg News FX and rates reporter Carter Johnson. Should we stay in the market?
We should, but I should point out, not if you listen to the president who talks about the reasons that rates should go down. He says inflation is under control and rates should be lower.
But he also says the economy is doing well. So
can you have both?
I don't know. I don't know. Because you do wonder if you lower rates, does that create more liquidity in the system? And that could certainly put some pressure on inflation to move even higher. All right, you want to talk markets?
Yeah, let's talk markets. The S&P 500 hitting a record intraday. We also get ready for 4 of the Mag 7 to report this week. And, of course, that Fed decision. Back with us, Alli McCartney, Managing Director, Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. Just over $1 billion in assets under management. She joins us from New York City. We've had this debate throughout the week talking about, yes, 4 of the Mag 7 stocks reporting in the remainder of the week. We, of course, have everything that's happening geopolitically. The president now making his way to Iowa to talk about affordability ahead of the midterms. And then, of course, Jay Powell kicking off that 2-day policy meeting in Washington, D.C. today. What matters this week to you?
I think you've really gone through them in the lead up to me just listening. We have wobbles out of Washington to see what happens politically. That's obviously a big wild card always. We have earnings and the fact that we have for the whatever you call Mag 7, AI 10, super meaningful. In addition, this week is 35% of the market cap addition to those companies. And the Fed meeting, although I think that's probably the least impactful, given that, there's very little expectation of a rate cut, and Chairman Powell is stuck between a rock and a hard place right now. So it is very unlikely that he says anything that's market moving.
Alli, I do think about how much we are hearing a little bit of a drumbeat when it comes to geopolitical, and not a surprise considering how we kicked off 2026 with the U.S. going into Venezuela, taking out, I should say, President Maduro. And I just, Jamie Dimon has kind of highlighted that area. David Solomon, we just heard from our team over in Europe, Stephen Engel. What about global issues? How does that factor into how you're thinking about U.S. markets, U.S. names, and maybe where investors should be positioning?
That is such a macro question, right? So,
yes.
Our CIO published a monthly report, and it's called "Nostalgia is Not an Investment Strategy." And the paradigm has simply shifted globally, and what that means is that the world has to evolve, and there are all of these impactful ways that it evolves, whether it's the dollar, whether it's increases in defense spending, whether it's a hangover from the pandemic, which is owning and monitoring your own supply chain. So it all matters. However, if you think back a year, we're almost before, trade day, think about how long the markets were in a panic because of that relative to Greenland and Venezuela. So I think there is a growing comfort with this president and his and the Don Roe doctrine. And there's a growing understanding that the paradigm has shifted going forward, and that geopolitics will be a risk going forward in a way that it was not. And so everything that was said before makes absolute sense, and I think increases the need, whether you're a U.S. investor or a non-U.S. investor, to be diversified.
But just on this, with Greenland and versus Venezuela, I think a lot of people were surprised about what happened in Venezuela, and then the president last week essentially walking back comments about acquiring Greenland in some sort of way. When it comes to geopolitics, does the market take him seriously? Does the market take him literally? Because he's kept people guessing. Let's just say that.
I heard, I think it was David Solomon say something about the noise. And you asked me last time when I was on, do I make investment decisions on this? And the answer was not in the short term, but yes, in the changes in the long term. And so I think the answer to that is twofold. The first is that this president has a style where he often breaks things first and mediates things back. And the market seems to be understanding that, as well as you pointed out, his desire to have more liquidity in the market to keep rates down, addressing the affordability concept, and voters who are very concerned about that before the midterm election, and wanting the markets to go up. And so the second thing is that, you have to really, most geopolitical issues tend to be noise in the short term, and they don't affect buying behavior in the long term. In the long term, you look to fundamentals. I do think with this presidency and the magnitude of the changes and the disaggregation of the way the world functions politically and from a defense and alliance perspective, there are some longer term issues and things. For example, the peace dividend that existed after the Cold War, and the fact that, we have representatives all over the world that are spending much more money on defense, and defense is now not just physical defense, it's cyber defense. So there are some real long-term investment themes here. Yeah. But at the end of the day, it's about, what can actually be done. What are the long-term implications of some of the fundamental fiscal packages and legislative packages? And so, again, this week in earnings is going to be meaningful given the market cap and the AI adjacent names we have reporting.
Hey, one thing I want to ask you before you go, Alli, we're looking at health insurers, which are coming under pressure. The Trump administration proposing limiting federal payments to Medicare Advantage plans next year. So we're looking at Humana and United Health and CVS Health really dragged down. We saw this in the aftermarket when it first hit last night. Do you look at this like a wait and see moment? Is it an opportunity to get a name that is now maybe 18 or 20% lower because you still believe in that we're going to need healthcare for more of an aging population? I'm just curious what your thought is, and forgive me, just about 20 seconds.
No, I think that's a great question, and you're right from a thematic and from the population perspective, it makes sense. It's a lot of these get killed. If you want to buy them, you buy them. Okay. If it doesn't make sense long term, then you wait and get more information.
All right, great stuff as always. Alli McCartney, managing director, wealth management and private wealth advisor with Alignment Partners.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow Jones Industrial Average lower, the S&P, NASDAQ. They are both advancing, and after losses earlier in the session, the Russell 2000 index of small cap shares up now by 0.1%. S&P up by 0.5. The Dow, however, slumping 0.9%, down 444 points. S&P up by 33. NASDAQ right now up 239. That is a gain of 1%. Key takeaway takeaway at this hour. We've got S&P at a record, could see a record close 69.83 where we stand right now. The old high set on January 12th, 69.77 on the S&P. 10-year ahead of the Fed decision tomorrow, 4.22%. The 2-year, 3.57%. Gold up 1.6%, 5,088 now on spot gold. Silver 108 right now, up by 4.1%. West Texas Intermediate crude up 2.8%, 62.31 a barrel on WTI. Bitcoin up 0.3%, 88,204 right now on Bitcoin. UPS is forecast full-year sales above Wall Street expectations. Shares of UPS up now by 3%. Rival FedEx also higher, up by 2.5%. Airline stocks lower. JetBlue plunging 8.1%. And American down after a rosy outlook, down now by 5.5%. A whole lot more on airlines coming up in just a moment. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Charlie, of course, covering this throughout the day about what's going on with airlines. They are still paring back flights as that deep freeze hampens the restart of operations at some major hubs. Industry bracing for further disruptions as another Arctic blast looms later this week, whether it's this weekend or next week, or maybe doesn't happen at all. We'll see.
American Airlines, speaking of the storm, said it's poised for a strong year. The carrier ramping up premium offerings. First, though, it's trying to survive winter weather that's prompting thousands of cancellations at U.S. hubs. Shares of American Airlines selling off today. To be fair, most airlines are down today. JetBlue gave an update, reported a wider loss than expected last quarter. It was a bruising 2025. The company is trying to get those higher paying customers to get them back to profitability, but was not able to provide reassurance there for investors.
Yeah, the group of airline stocks as a whole off about 2% today. Here to talk about that, we're also going to talk about Boeing, which also reported today, is Sheila Kahyaoglu. She is Managing Director in Equity Research at Jefferies. She joins us here in studio. Nice to have you here. Happy New Year.
Thank you for having me.
I know January's over, but
Almost.
Let's just start with airlines, and then we want to move into defense because you cover that really closely as well. It does feel like they're all finding their way back after the storm. We're trying to see if there's another storm. In terms of the impact, is it still a case of they're still trying to assess? How do you, as someone who covers some of these names, kind of factor that in?
Yeah, in terms of airlines, we're looking for revenue growth. We've seen the same trend across American that we saw at United and Delta. Corporate was up 12%. Corporate momentum continues. I'm taking a very long flight this weekend. And then main cabin weakness, but it's getting a little bit better. And it's all about cost control. That's why I think United went up the most on earnings, is they really beat out on costs when American Airlines margins came in 100 bips below our estimate. So I think the most polarizing stock is going to be Southwest. I'm really excited for their report on Thursday because they have some lofty targets. The stock's at $40 today. Some people think it's going to 30. Some people think it's going to 80. It's all about they're adding extra legroom seats, and is the strategy going to work?
But that's a huge shift for Southwest. I mean, they're essentially moving away from their DNA, what they're known for, and the culture that they're known for, and that's alienated some people already.
Yeah, it depends. So the average Southwest fare is about $109. So if you add an option for extra legroom or refundable or seating, if you add $50 to that cost of that airfare, so $159, that's a 50% increase almost. Does the passenger back away? I'm not sure. But then again, it's only $159. So how do we think about that? And what adoption do we assume? We're at about 5% adoption in 26. They have a bunch of other benefits as well, baggage fees and cost optimization. So that's driving their EPS to $3, essentially EBIT tripling off of a very low 25 base. So we'll see how much of that they get. You know, some people think they could get to $4 or even $5 as more of that extra legroom adoption comes in. But it's their first go at it, and we'll see how it takes off.
You have a $45 price target. So you're not at the 80 and you're not at the 30. So maybe a little bit higher from where we are?
You know, I would prefer United, where if you think about United, they're going to be accounting for 44% of the new premium seats through 2028. So they're going to be accounting for more than any other airline in the U.S. Americans after that, and Southwest because of their extra legroom. I prefer to bet on that corporate customer paying $1,000 plus $100 to achieve that additional corporate fare and that higher margin, where United is adding its seats, than Southwest adding on the. You know, I think both are, given the multiples that they're currently trading at, United is more appealing to me.
Let's talk some defense, and then we'll
Let's do that.
talk some Boeing, too.
Sure.
I want to look at shares of RTX. They're higher right now by about 3.4%. Profit topped Wall Street estimates, a sign of momentum that the company awaits a potentially huge jump in U.S. military spending. That's kind of where I want to start. What we've heard from President Trump in the last few weeks, not just with the idea of a $1.5 trillion defense package, but also calling on some of these companies to do a better job, pay their executives less, and also build stuff for the U.S. government more quickly. What are these CEOs to do?
There's a lot going on in defense, and that's why I was saying it's an exciting sector to cover, because this is the first time that the five primes might no longer exist as five primes by the end of the Trump administration, which is our view. We think that there's going to be, similar to what LHX announced 10 days ago, there's going to be more deconsolidation happening among the primes. Their budget is going up by $500 billion. From $1 trillion. We don't know the time period of that spending. We don't know how much will be added to actual equipment and R&D versus military operations, but they're seeing an increase, whether it's to fund defense tech names like Firefly, Voyager, the recent IPOs we've seen in the space, or the traditional primes, or suppliers like AeroVironment, Kratos are up 100% on the year already, and we're 27 days in. So it's really interesting to see what happens in defense, but there's a lot of shakeups that I think are going to play out. So it's about seeing who has the best positioned portfolio and who to play from here.
I was surprised, I know when you walked in, we started talking, and I mean, aerospace defense, just the S&P broad index up about 9% year to date, up about 46% last year. Is it just because defense spending all around the globe is just happening and everybody's amping it up?
It's tremendous.
Is it as simple as that?
Tremendous growth internationally, 20% plus. NATO budgets, Japan, Korea. We're seeing countries like Serbia put in orders that never used to put in billion-dollar orders for equipment to companies like Elbit in Israel. Coupled with the defense budget going from $1 trillion to $1.5 trillion makes defense very interesting, and the administration has been very supportive of defense tech, emergent technology companies that had stagnant revenues for the last decade are seeing 30-40% growth.
But as Tim mentioned, when the president talks about an industry, it can be good or bad. So is it good that they're on his radar? But when he's
not when he says only pay the CEOs $5 million.
We're talking about CEOs.
He did back off of he didn't quantify in the executive order the pay,
but he mentioned it in the social post earlier.
Yes,
it's a headline that caught our attention.
And $5 million, it sounds like a lot of money, but not for a CEO who's paid over $20 million.
Right, the executive pay, the average executive pay, I would assume in any sector is over $20 million. So the caliber of folks you would get into defense would be the opposite of what the administration is trying to achieve.
So what do you hear from defense companies about getting some attention like that from the president? Do they kind of brush it off a little bit? Like we're talking with them?
I think one interesting trend we've seen from the reports, whether it was Northrop or Raytheon today, is the lack of buybacks, because that's what the administration asked for, a focus on additional CapEx. Raytheon mentioned that, Northrop mentioned that, Boeing mentioned that. So across the board, everyone's like, sure, we're investing, we're going to get you supplies on time, that's our job, and it helps funnel the growth.
The Northrop CEO saying Northrop is balancing the need for performance with affordability and speed to market to meet the U.S. Defense Department's focus on speedy development.
Yes, and I think Kathy Ward, and the CEO of Northrop, said this was the best spending environment she's ever seen in her career. So most of these executives are very bullish.
Do the upstarts in defense tech pose a threat to the incumbents? And I'm thinking of, an Anduril that is not yet, and I say not yet because obviously this company, I'm guessing, will IPO at some point soon. Do they compete with these incumbents?
Yes, clearly they're competing and they're collaborating. They're working together, both internationally and domestically. The primes are trying to work with, Northrop has a partnership with Kratos on CCA. It's a autonomous vehicle, essentially. So we're seeing a lot more collaboration, but they're also trying to take share. But the budget is growing overall, and that's the bottom line. Although we're not really seeing it in 26. Northrop's guidance is 5% growth. They talk about an acceleration from there in 27, 28. Same thing with Raytheon. It was modest growth in defense. It didn't really pop. But yes, it grew in the second half versus the first half, and we'll see how those trends continue.
I feel like with all of the geopolitical tensions and the wars that we've seen around the world, that everybody comes back to the U.S. military might and the defense companies here in the United States. What is the global picture? Where's the competition? Is there not much global competition, Sheila, when it comes to the U.S. defense companies?
So I think it's focused on maybe a few things. First is missiles and munitions readiness. Like we need to have that available, and that's why we're seeing companies like Lockheed increase PAC-3 production from 600 missiles a year.
What's PAC-3 production?
It's a missile. PAC-3 is the name of the missile.
Got it.
Going from 600 units a year to 2,000. That is significant, to say the least. That's $8 billion of additional revenues to Lockheed over 7 years if they could ramp to those levels. The backlog's 20 years for a missile like that. We're seeing that across the board. LHX 10 days ago or 2 weeks ago now announced that they are seeing a government investment within their solid rocket motor business that powers missiles. They're going to open up 60 factories next year. LHX currently has 250 factories. So that's the magnitude of investment we're seeing from the government. So focus on missiles and munitions. And second, I think it goes back to old school warfare. Everybody thinks helicopters are over and F-35 is a bad program. But if we think about Venezuela, if we think about Iran, what's the kind of equipment we're using? So, it's not necessarily rebuilding an entire fleet for the Navy, but it's doing things that we could use pretty quickly.
Just in the last 90 seconds, I want to hit Boeing with you. Shares are down today by about 1.8%. The company did report this morning a second straight quarter of generating cash, 57% bump in sales during the final 3 months of the year. Shares down, though. Is it because of accounting charges for the KC-46 tanker program? Is that it?
No, everybody just assumes that's going to happen every quarter.
Okay.
So we're all good there.
Why are shares down after a quarter
so
that looks pretty good?
Shares opened down. The call at 10:30 got it up to it reversed about 4 points, and then they're down again. We're a believer in Boeing. Their underwriting, their free cash flow was a loss of $2 billion in 25. They're talking about positive $2 billion at the midpoint in 26. Normalized for one-time items, they're saying their free cash flow is high single digits, so say $8 billion. They're reaffirming their $10 billion target, and then they're saying they could go above that. So, 10, 15, it's giving long only is a reason not to dismiss the stock. If this company could actually earn $10 billion of free cash flow, then it's quite compelling at its current valuation. So we're seeing a lot of fluctuations. Are they talking back 27, 28? No, I think that you're going to see $2 billion in 26 and an improvement in 27 and 28.
So Boeing, let me just say, you've got a $290 price target. It's at $244. You feel good about that?
Yes.
Do you want to raise it? Or?
We are supportive of Boeing. We think there's a few positive catalysts. I think President Trump might be headed to China in April. We'll see if Boeing heads there. We haven't seen a China order since, I can't even recall, maybe it was 2019, maybe earlier. So I think Boeing works from here, depress prices for Maxes, maybe 50% below what they historically sell at today.
This was fun. Come back soon. Sure. All right. Sheila Kahyaoglu, she's Managing Director in Equity Research at Jefferies, joining us here in studio. When we come back, an update on what's going on in Minneapolis.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow lower, S&P, NASDAQ, they're both advancing. Russell 2000 index in the green, up 0.2%. United Health Group leading losses in insurers on a disappointing forecast. United Health Group shares plunging 19.8%. United, a member, United Health, a member of the Dow, down now by 422 points on the Dow, drop of 0.9%. S&P up 34, trading at a record 69.84. The old high there was 69.77. Right now, the S&P up 0.5%. NASDAQ, the composite index, up by 1%. NASDAQ 100 up 0.9. And again, the Russell 2000 up by 0.2%. 10-year ahead of the Fed decision tomorrow, 4.22%. The 2-year, 3.57%. Complete coverage, by the way, on Bloomberg Television and Radio of not only the decision, but also Jay Powell's news conference. Spot gold up $81 the ounce, 50.90 right now, up 1.6%. Silver with a $108 handle, up 4.5%. West Texas Intermediate crude up 3%, 62.45 for a barrel of WTI. Bitcoin 88,224. Bitcoin up by 0.3%. Boeing generating cash for a second straight quarter. It also reported a 57% bump in sales during the final 3 months of 2025. Boeing shares are trading lower. Boeing down by 1.5%. And RTX's CEO says the aerospace and defense giant plans to continue paying dividends to investors after President Trump attacked the company for sluggish weapons output and lavish shareholder returns. Right now, we do have shares of RTX trading higher by 3.6%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet there. Hey, OpenAI CEO Sam Altman joining a growing chorus of Silicon Valley leaders who are expressing outrage in the aftermath of the fatal shooting of Alex Preddy, aligning with tech industry workers who have urged CEOs to take a stronger stand against the violent immigration crackdown in Minneapolis. Sam Altman saying what's happening with ICE is going too far. He wrote this in a note yesterday. He shared it with all employees, according to a person familiar with the matter. There is a big difference between deporting violent criminals and what's happening now, and we need to get the distinction right. Again, this is Sam Altman in a memo yesterday to his employees, according to a person familiar.
Other tech leaders, including Anthropic CEO Dario Amodei, LinkedIn co-founder Reid Hoffman, Reddit co-founder Alexis Ohanian, have also spoken out against the violence in Minnesota. This is Greg Bovino, the U.S. Border Patrol commander who became the face of President Trump's sweeping immigration crackdown in Minneapolis, is leaving the city, Carol, following a mounting public outcry over the killing of 2 U.S. citizens by federal agents just in recent weeks. All
right, so we wanted to get you an update. We do head back to the White House and Bloomberg News senior reporter Jen Dloughy. Jen, good to have you here with us. We know President Trump on his way. I don't think he's landed yet. But we know there is a crowd in Iowa waiting for him. He did say en route to Iowa, talking to reporters, he's meeting in terms of Tom Homan, the border czar. He said he's meeting with the governor in Minnesota. He's meeting with the mayor, I think, later, and I hear that's all going very well. What are we hearing? Is it all going so well?
Early reports out, we don't have a great deal of intelligence out of those early meetings, but what we are seeing, of course, is this effort by the president, it appears, to dial down the temperature, to do really 2 things, to express support for Homeland Security Secretary Noem, and at the same time, who's obviously been criticized for her handling of these incidents and her characterization of them, and then at the same time, also try to find a way forward with local leaders. The president repeated that comment to us several times before he headed out to Iowa, saying that he believes the conversations with the governor of Minnesota are going very nicely. And of course, he was previewing that later conversation today with Mayor Jacob Frey.
I was surprised to hear, just based on the reporting that we've seen in the last 24 hours, that Tom Homan was headed to Minneapolis. Some of the reporting from other outlets indicated that Kristi Noem had been sidelined in some way. She was at a meeting at the White House yesterday. It reportedly went a couple of hours, according to other outlets. How are you reading into that reporting? Has she been sidelined? The president earlier expressing his support for her, saying she will stay on at the agency. How are you reading into that?
It's important to appreciate that departures aren't always telegraphed well in advance. But yes, for now, the president is very clearly, insisting that she has his support. That meeting, first reported by the New York Times last night and stretching over 2 hours, included her top aide, Corey Lewandowski, the first campaign manager from Trump's 2016 presidential bid. And also, it's notable that they came out of that meeting with the president's messaging today about not backing down from her. And in fact, when asked about Noem's performance, he immediately pivoted to talk about, how she's done a great job on the border, traditional deportation, focused comments from the president there. Notably today, on the way to Iowa, on the plane on Air Force One, Trump is joined by his senior advisor, Stephen Miller, who had also drawn a lot of criticism, just like Noem, for his initial characterizations of the shooting over the weekend. Stephen Miller had intimated on social media that the man shot on Saturday was an assassin and domestic terrorist, even though video evidence suggests he had been disarmed and hadn't brandished a weapon.
Hey, Jen, in terms of, I was going to ask you about who's the architect of all of this, and I think there's been a lot of reporting, but does it really matter because the buck really stops with the president, to be fair?
The president, this president in particular, takes ownership of his policies and has been quite happy to tout his deportation agenda. It's something he campaigned on so vigorously, and in office has really claimed as a source of pride that he's accomplishing his goal of deporting illegal immigrants. What is,
and not the only president to do it, right? We can go back to the Obama administration, to be fair, because I think it's important to kind of point that out.
But, Stephen Miller is seen internally as, of course, a big factor in this push. Obviously, someone who's been critical of the, amount of immigration and illegal immigration into the U.S. But to your point, Trump has taken ownership of this. This is as much his issue as it is that of a key ally and aide. And it's one where we've heard him talk very openly about being frustrated with the messaging on this. Last week, he lamented that, the focus hadn't been on the rapists and murderers, as he characterized them, that were being deported. He even, took to the White House briefing room last week to show pictures of some of the deportees. So that, kind of speaks to his frustration that the messaging has shifted away from where he wants it to be. And of course, that he's lost some control over the narrative here. Polls show that even among folks who care, who support his broader immigration crackdown, there's support is waning for the overall effort in the wake of these two deaths.
So then where do deportations go from here? If Minneapolis's Mayor Jacob Fry and the Governor Tim Walz of Minnesota are successful in de-escalating this, does that provide some sort of roadmap to other governors to then go ahead and say, hey, your federal agents are not welcome here. You are going to have to find a different way to accomplish what you want to when it comes to deportations?
It'll be interesting to see how this gets resolved. I think that will be key to the extent to which it is a roadmap for other states. Clearly, the governor and mayor have been very forceful in their eagerness to see these folks leave their area. At the same time, Walz has in the last day indicated he wants to turn down the temperature. We're going to want to watch what happens with Tom Homan, the border czar that Trump dispatched to Minnesota. He has focused much more on traditional deportation efforts rather than kind of this broader dragnet or these broader operations that Kristi Noem has favored. And so, if we see that kind of refocusing back on more conventional deportation efforts, that could be a de-escalation and a roadmap for other states and cities concerned about immigration enforcement in their backyards.
All right. Super appreciate it, Jen. Thank you so much. Bloomberg News senior reporter Jen Dloughy joining us there from the White House. I do also want to mention that around 12:20 today, the governor of Texas, Greg Abbott, put out on social that he's directing state agencies and universities to freeze new H-1B visa petitions. So we're seeing some stuff happen around the country.
Yeah, we're going to keep an eye, too, on President Trump, who's set to give remarks a little later in Iowa. Stocks on the move next. This is Bloomberg.